Hey guys, Zoeb here from OneGlanceTrader.com, and in this video I'll be sharing with you another classic trade opportunity using the OGT price action indicator. And for those of you who are brand new just tuning in to my channel, I'll put some links in the description of where you can download the OGT price action indicator absolutely free, and secondly a tutorial video to get you started using the indicator right away. Now, the signal I'm going to talk about is this engulfing bar that appeared today on the Aussie JPY 5-minute chart. So again, we are at the 22nd of July, which is today, and this bar was formed on 6:55, basically 7 p.m. Now, so let me explain very quickly about why this signal came in and what all these other kind of lines and everything kind of mean. So before I talk about the actual engulfing bar, let me explain that. Let me explain the lines. So the blue and the red lines, they're just EMAs, and they are, dial guppies, kind of gamma kind of signal or trading kind of methodology in terms of the shorter time frame EMAs are just what the quote unquote investors are doing in the market, and the longer term EMAs are what the investors quote unquote are doing inside the market. And again, I've got a video on this which I'll link to inside the description, so you guys can check out more on that. We've also got a round numbers indicator, which basically shows or natural support and resistance lines of whole numbers, which again are psychological levels that price tends to stall or reverse or something kind of happens. It's not guaranteed, but it may happen. Then lastly, we've got the MACD indicator at the bottom over here. So again, all this stuff is will either be in the description or around on my channel if you're interested in understanding more about that. And the way that the kind of signal works, especially in version 1.3 of the OGT price action indicator, it's designed really to kind of trade with the trend. And the way one of the ways the signal works to identify the trend is that if all the kind of moving averages align inside the right direction. So the shortest, longest MA, if that makes any sense, is 30 period, and the longest MA is 60. So again, it goes like 30, 40, 50, 60, and things like that. They are all aligned inside the same direction. So the 30 MA is closest to price, and the 60 MA is furthest away from price. So if they're all in those type of orders, so none of this stuff over here where it's kind of intertwined, you can see here that this is a clear uptrend and this is a clear downtrend. So it will only form a signal for engulfing and pin bars if one of the criteria are met, that it is in a quote unquote trend. So as you can see, today it did two signals, two engulfing, and I'll tell you why this engulfing is a definite trade, and this one I probably would have left. So I'll go through both examples. So there are one, two, three, four reasons why this is a good trade. And again, the more reasons that you can get things aligning gives you confluence. So a number of things happening in your favor increases the probability of you making this particular trade successful. So what are they? So the first one is that we're in a clear downtrend. You can see that here, not only by the MAs, but you can see we had an uptrend, then we got one down, pull back, lower lows, lower highs, lower lows, lower highs, right? So at this point, we didn't know any of this even existed, but again, it is a very nice, consistent downtrend. Then we see the engulfing bar print. So again, that is again a bearish engulfing bar. So the number 2, that is another signal that price still wants to continue down. The third signal is that it is printed on a quote unquote natural resistance line, so a whole number, so on 76. And you can see here it stalled with this one bar but pushed up. Over here you can see prices consolidated and stalled at this level, and here obviously you can see now, but you wouldn't know that it's reversed and continued to go down again. So that's the third way, and the fourth way is a hidden divergence. So I'm not going to go into divergence in this video. I've got other videos on divergence, but what I will do is bring up this cheat sheet that I got from the internet. Again, I'll link to this inside the description if you guys are interested. And the bit I'm interested in is looking at the bearish column and looking at hidden divergence. So this is where price makes a lower high. So if we go back here, and I'll do this here if I can, probably not the right trend properties. Definitely want to make that a different color. Definitely make that like that, just so I can kind of show you what I mean. So price from the last high to the high of the engulfing has made a lower high, and then the oscillator, in this case the MACD, but you can use the RSI, the momentum indicator, whatever it needs to be, has made a higher high. So if I now take those 2 points here, hopefully you can see there that that point and that point has made a higher high. So again, giving us the fourth reason why this potentially has is on a downtrend. The other way that I would also like to do it, if I get rid of these, but again it's not 100% needed, is that there was a bit of resistance inside the EMA. So price hit the EMA line, and when it formed, if you zoom in a little bit, that the moving averages, still stayed quite spread. They're obviously not as spread as here, but they are quite spread. And again, it wouldn't have formed if the all the MAs weren't aligned. So again, that again would have been a great entry to kind of get in. So if we went in, let's say on the low here, and again, if you want to bring it, your first target probably would have been down back to these lows, and then probably down to this support line over here, which is over there on there, which, again, you're not in the trade for long, you're in the trade for about an hour, but you can easily get a 1-to-1 or a 1-to-2 return on there. And again, you wouldn't know, or you could trail it all the way down. You probably would have stopped out over here. Now, hopefully that gives you a good example of why I think that this was a great trade. Very, very quickly on this trade over here. Now, the reason why I wouldn't have gone on this trade is, firstly, this is a very exhausted. Again, I'm not a fan of Elliott Wave. Well, I don't really look at Elliott Wave, but you can tell that this trend has gone on for a long time, not in terms of actual time, but you've got a number of legs inside here, and the actual pulse down are a lot shorter, and the pullbacks are a lot smaller. So where this is still kind of early in the trend, this isn't. The second thing I would also bear into account here is it's in the middle of kind of nowhere, you could argue. Again, because I like to not keep support and resistance subjectively in terms of me setting lines. I'm more of a fan of just using round numbers, and in my view is if price is not anywhere near a round number where I'm looking to get in, I think it's in quote unquote no man's land. So again, I'm not there. And also the gap between the two sets of moving averages, Dalgapu says the greater the gap, the stronger the trend, and you can tell that the trend looks quite strong here. And even here, where we are now with price has gone into the investors EMA, but you can see that they are still very much apart here, which could signal at least another move to the downside, but I don't know that. I'm only looking at what I can kind of see over here um, at this stage, where it would be more of a riskier trade for me personally than this one over here. Again, because it has that round number and it has hidden bearish divergence on there, which makes this a more of a higher probability trade than this one over here. So again, I really hope you've enjoyed that. I really hope you can understand and see how the price action indicator really is very useful. So please subscribe. I'll doing more videos around the price action indicator because you guys have been asking for it. And I shall see you on the next video.